welcome to this special webcast, Markets of Your Choice. And before we begin, as always, we give you our caveat. And as always, reminding you that there is a substantial risk of loss of funds, pretty much trading in any market in any time frame. So with that in mind, before we begin, to remind you that many of these markets you may not personally trade, but the idea is that you could use what I'm saying here, my outlook, and how I look at the markets with candles and Western technicals to apply it to your own markets. And remember, candles work in any market and any time frame, as attested to the fact we have students in 85, I think more than 85 countries. So with that in mind, okay, we will start with one of the first requests, which is Microsoft. And of course, we'll be looking at Bitcoin and Ethereum and really high visibility markets in a little bit. So what I'll look at is, you can see a blue line and a red line. These are moving averages. The blue is a simple 20-day moving average, and the red line is a simple 50-day moving average. And I use this to determine the trend, longer term trend of the market. When the 20-day is above the 50-day moving average, it's a positive longer term trend. The Japanese, many of you may be familiar with this already, the Japanese call a positive crossover with a shorter term moving average crosses above a longer term moving average, a golden cross. And on the flip side, if the shorter term moving average crosses under the longer term moving average, it's called the dead cross. Just a little education. So long-term trend in Microsoft is up, as is the short-term trend, although the market has pulled back a little bit. Net, you know, very much in a bull channel in place. This is a classic bullish engulfing line. See where the green wraps around the red. And one of the nice things about candles, and here's a nice example of that, is you could use the candle signal, the key ones like a bullish engulfing pattern, as a potential support area based on the close. So if you bought here, you would have a protective stop, ideally on a close under the low of the bullish engulfing pattern. Notice how it moved under there. The market moved under there on October 4th, but it didn't close below there. And for those of you who are a little bit more savvy with candles, is there another reason why there was key support around 282? And if you caught this, you would have been up $40, $50 maybe. You know, this key support area, not only because of the bullish engulfing pattern, but classic rising window, okay, gap. And so you had two reasons to consider buying it, always with a protective stop. And actually my target just would have been to the highs here. All right, and we obviously exceeded that. So now we're looking at a potential support area. And the challenge with this is there's no clean-cut support. I see, you know, maybe last few sessions, we had like 3 out of 5 sessions down at 306. Obviously, there's a rising window. All right, but and the rising window, but you know, that's a long way from here. So what I'm going to look at is some Fibonacci retracements. So going from the low to the high, and you may not have first support for much lower anyway. And you can see the first Fibonacci retracement at 38% is right in the rising window. So maybe a little support, only because it was the low over the last week or so, right around the lows from today and yesterday. And right now the market is in a box range. So long as you have 2 points of support and 2 points of resistance, you have a box range. And you can see, and I'm sure you know, that Microsoft is in uncharted territory. So very hard to get, you can't really get a resistance area because there's no key highs to to key off of. But what's nice about a box range is that if the market does break up above the top end of the box range, you could take the height of the box, in this case $8, add it, if it does break out, to the 339 level, and you get a target to 347. Now, the theory is that if the resistance area is broken, if the market is good, this old resistance should be support. Call that change of polarity. Okay, so now let's look at the next request. Okay, we'll look at PLUG. And again, most of you are not probably trading this, but as you could tell from the strategies I gave in the last market, these are technical, these are candlestick strategies you use in all markets and all time frames. Long-term trend is up. Short-term trend is also up. Now, based on what we said before, okay, remember change of polarity, old resistance potentially becomes support. So I'm drawing a resistance area here. Okay, and you can forget about the blue line down here, just draw a horizontal line. So in theory, right now the market has made a new high for the move, and obviously the short-term trend is up. Here's another market like many others in a bull channel. This old resistance area should become support. It's up to the bulls now to defend their territory. And so that means support zone should be anywhere from 43 to 42. If the market does get under 42, then we have to look at the bottom end of what was a prior box range you see over here. Okay, down at 38. And we could also use this box range here, taking the lower end to here. So at $4, we do get a target to 46. Okay, it doesn't mean it's going to be resistance. And that 46 target is only valid as long as this old resistance holds support. But if I had to pick my next resistance area, this is one of the few markets that are not at all-time highs. It's the little spike high here, okay, up at around 48. Okay, we'll look at Bank of America. I'm going to expand it a little bit to make it a little easier to see. Let me just drag it down here. Okay, all together, long-term trend is up. Short-term trend, I'm going to have also is up. And the reason for that is although it's only 3 sessions, you can see over the last 3 sessions, the market has made higher highs and higher lows. And we could see where the resistance is, only because the market stalled there over the past couple of weeks. Okay, right around 45 and a half, 48 and a half, 48 and 3/4 in that area. The rising window as our support area. Find something a little closer. I like the lows of last week only because we had a rally there. And it's also very close. Notice the 3 consecutive sessions here where the market tested and tested. Got there a couple of days ago, so right around 46. And here's another market essentially in a box range. Okay, we will now look at XLK. Long-term trend is up. Again, the 20s above the 50-day moving average. Short-term trend I'm going to have is down a little bit more, down to neutral, only because anybody recognize this candlestick signal? The red wrapping around the green coming during an uptrend. Right, that's a classic bearish engulfing pattern. So, since then the market has fallen a bit as to resistance, and they'll give you support. Okay, not only does it have the bearish engulfing pattern, but notice for 3 consecutive sessions, the market has stalled right around 168. So I'm viewing that as my first resistance area. And I'll show you. You can see how nicely the change of polarity works. See this resistance over here? over here, and notice the market got above it, closed above the resistance area. Old resistance equals new support. Look how nicely that held. So a bit down from here, right around the 160 and a half, 160 and 3/4 as my next support area of consequence. If you want something a little closer, again, I'll just go from the recent low here to the high, some Fibonacci retracements you could look at. Right now, we're holding about a 50% retracement, right around 164. But in my opinion, the key support potentially is down over here. Okay, let's look at a currency. We'll look at the pound. Oops. Close this out. We'll look at the pound dollar. It's one of the requests we got emailed to us. Okay, and I'll just compress this here. So all together now, the trends are all down, right? Look how the 20-day has stayed below the 50-day moving average. So the longer term trend is down. Short-term trend is obviously also down. Now, little thinking, put on your thinking caps and play the Jeopardy music, but that's copyrighted. Think about where you would have first resistance and think about the change of polarity. We've been looking at the old resistance becoming support, but doesn't it work the other way? Right, old support becoming resistance. So with that in mind, once again, as long as the support area or resistance area is tested twice or more, okay, support, 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 magic, got under it, look what became resistance. So here again is another strategy you could use in your market, particular market, whether it's a Forex or options. And with options, one of the great things about candles, it's not going to give you implied volatility and all that, but it give you the sense of where maybe to think about putting on a put, or with a bearish candlestick signal, thinking about maybe lightening up on a long position. Anyway, this is my first resistance area. Okay, essentially the highs right around 132, 134.30, 134.20 in that area. And I'll go back. One of the questions I'm asked a lot is, where do you find support if you don't see it on the chart here? Well, you go back as far as necessary. So what I'm going to do is look at a weekly chart and look at an area where the market had important lows. And you can see this is a weekly chart. So these lows become particularly important right around here. I think a zone here. Okay, so this whole zone here, look at the support, support, support. We're talking around 132, 130, 150 on this weekly chart. And we're going to look now at Snap. And then we'll be looking at Bitcoin and Ethereum and Apple and Tesla and other cool ones. So let's look at Snap. Long-term trend is down. Short-term trend I'm going to have as neutral. And you could see why. The market is really trying to build a base over here. So key support, potentially. And whenever I talk about support or resistance, it's obviously potential support or resistance. Okay, essentially the lows over the past 3 weeks or so, right around 52. Let's see if that's anything on the weekly. And you can see why, 52 is kind of an important area. This is a weekly chart. If the market does close on a weekly, that is a Friday close under 52, then I look at the weekly and look at all the support here week after week after week, down around 48. So 52 looks really important because a weekly close under that could imply the next support area is down at 48. As to resistance, a little tough for that. Go here, let's see. Really can't use change of polarity because although support was tested here a few times. See how the market got below it and above it. So we're going to have to look at this. Here's a huge falling window. The trouble with this huge falling window is the whole window's resistance. The major resistance is up here, but even if the market rallies, it could stop here and here. So what I'm going to do is what I did before. Go from the recent high to the low, look at some Fibonacci retracements. So even that's far away from here because of the big downdraft. You know, it's moved down so far so quickly, right around 62, 30 in that area. So right now, I'm just going to say very short term, we have that key support and resistance just at the highs this week. Again, I'm not placing a lot of emphasis on that. Okay, so that was Snap. All right, so we'll go look at Apple in a minute and Tesla and Facebook and Bitcoin. But before I do that, I'm going to turn it over to Paul with a really exciting time-sensitive announcement. And then I'll be back on with Bitcoin and the other ones.
Thanks, Steve. Hopefully you can all hear me. I just want to talk real quick about our Black Friday promotion and talk just for a couple minutes here, and then I will be handing it back to Steve so that he can go and do additional markets. We have a Black Friday event that is going on until November 28th. But what you'll see there on the left, and I'm going to actually put the link into the chat so that you all have that. And if you're watching this via recording, just look below the recording link and you'll see the link to the special offer. What we have is special offers 1 through 5. Special offer number 1 is for any program inside of our library. If you use the coupon code PROFIT, you're going to be able to save 15%. And if you click that red button on that link that says Browse Our Library, you'll be able to go through all of our different programs. And a lot of people tell me, hey, we have a lot of programs. I'm not sure what to choose. Well, if you're not sure, you would be able to, on that page, click on the chat function and be able to do a chat with any of our chat agents. You would be able to email us, or you'd also be able to fill out a form if you scroll down on this page as well, and we will get back to you with a recommendation. So we do have a full library. Again, using that coupon code PROFIT, you'll be able to use 15% off. And then special offer number 2, if you are a crypto trader, and we get this obviously very often now, we have a lot of people very interested in Bitcoin and crypto and Ethereum and everything else. We have a specific training just for crypto trading. If you click on that button, you'll be able to learn more about our crypto training, and again, use that coupon code PROFIT to take 15% off. Special offer number 3, as you can see, we have a lot of people requesting Forex markets. We have education specific to Forex trading. Clicking on that red button will take you to all that information. Special offer number 4, we have a lot of people getting into options, whether they're adding options on or they are brand new to trading and they want to do options. There's a lot of advantages to trading options. We have a whole 3-volume series on on option trading. And then number 5, there are highlighting software that works directly on our MT4 platform. Again, because we have students in 85 countries, we know MT4 is one of the most popular platforms around the globe, and therefore we have a lot of students asking for it. So even if you do not see a special offer, the first special number 1 is for any program inside the library. And we have a lot of different programs, whether you're brand new, you're advanced, if you're looking for any of our other software platforms or any of our other education or programs, you can utilize that coupon code PROFIT and take 15% off. Now realize, these special offers are only good until this coming Sunday. That's why you see that countdown timer. Now this is just a screenshot that you see on here, but if you go to that link that I put in the chat, you would be able to go to this page and you'll see that countdown timer actually moving. Now on the right part of the screen, this is where we have our value-packed bonus program. This goes from any purchases made in our Black Friday event from November 1st all the way up to November 28th. Any purchase at all, you'll be invited to a special private roundtable discussion with Steve, where he will be doing additional markets and answering questions. Any purchase of $500 or more, You get your choice there of either the poster or the candlestick companion. I'm not going to read those descriptions to you now, but either one are great resources to have near your trading desk. Any purchase of $1,000 or more, you'll be able to have both the poster and the companion shipped to you. And any purchase of $2,500 or more, you'll get the poster, the companion, and a coaching session, which is a one-on-one coaching session with one of our NISSING certified trainers. Just you and the coach in a 30-minute session designed to help you achieve your goals. So any purchase from November 1st through November 28th qualifies you for our bonus program, and you can combine multiple purchases. The special offers that we have going on right now until Sunday, as you can see there on the left, again, using coupon code PROFIT will help you save 15% off of any item inside the library, or the special offers that we put there of our crypto, our Forex, our options, or our highlighting software. So with that, just wanted to show you that. I'll put the link in again so that you can click on it directly. And I'm going to hand this back to Steve so that he can go through some more markets like Bitcoin, which we obviously get requested. We must have received that probably the most often request that we received today from everybody emailing in the requested markets. So take advantage of our Black Friday event. If you do have questions, when you go to the page, there is a chat function where you can do a chat with any of our chat agents. And the great thing about that, every chat agent is an actual trader. We don't hire chat agents that just help you with your password. Our chat agents are actual traders, and they can answer questions not only about our programs, but also about how to take advantage of them in your trading and investing. So Steve, I'm going to hand it back to you so that you can get into more markets.
Great, thank you, Paul. Okay, let's do Bitcoin. Okay, so Bitcoin, long-term trend is up. Short-term trend is actually neutral. Okay, we have a couple of little, well, I'm not sure about so little, some warning signals. First of all, there's a bearish engulfing pattern, red wrapping around the green. Everybody see that? And I'm going to make a resistance line here. And notice how the market got above it, but hasn't closed above it. Now, this one's a little bit more advanced candle signal. You don't see this too often. This is an evening doji star. So what happens is the classic evening star, a green candle, a real body green or red that doesn't touch the first real body. The third real body doesn't touch the second real body either. And this is almost a doji, so I'm going to call this a doji. So this is an evening doji star. Now, don't let the fact that we have two bearish signals mean that the market's going to go from 60, say around 70,000, rounding off to zero. It doesn't mean that. It just means it's an important resistance area. And in theory, what should happen if, like we've talked about before, if the market does get above this resistance, let's say it gets to 70 or even 71,000, it's really important for the bulls to stay in control that they have to hold the market above this resistance area that has stalled over the past couple of weeks. Now here we have a small window. This is why I like tiny windows. See the gap? And a rising window, as this is, becomes potential support. Now, we saw in one of the other markets, we had a huge falling window. And the problem with a huge window is that it gives you a very big support or resistance area. But what's nice about these small windows, it gives you a very tight potential support area. So you can see, I'm going to try to draw this as accurate as I can. See that small window? Look how it became support almost to the dollar. So that is still my first support area, right around 62.5. Then under that, yes, there's that bullish engulfing pattern. That would be the next potential support right now. Now, we could view this support, resistance, resistance. So it's about, let's say about $6,000, kind of eyeballing it as a box range. So that means if it gets above 69, we would add 6 to that to get a potential target to 75. Here again, if the market gets above this old resistance, that target is only valid if on any pullbacks this old resistance becomes support. Okay, we'll look at Ethereum. Okay, just want to make this a little easier to see. Okay, all trends are up. Obviously, a very nice. And when I say nice bull channel, it's because it's like at a 45-degree angle. You know, when you have markets that are rallying more like 70 or 80 or 90 degrees, they get really overbought and become vulnerable, much more likely to a correction. Doesn't mean you're always going to have it, but a 45-degree rally is very sustainable because the market moves up, it gets used to these higher levels, it moves down a little bit, you know, relieves whatever overbought condition there is. Overbought just means it's moved up too far too fast, moves up, then moves down a little bit, digests the gains. So short-term trend is up, you know, because, and I'm sure many of you are aware of it, but I put a weekly chart here to show we're not, the market's in uncharted territory. So, you know, getting resistance, I like looking at prior major highs. We don't have that here. So I'm going to look is the highs over the last week or so, tested 3 times as a resistance area, right around 49, 48, 5, 49,000 in that area. And here again, not surprising, if the market closes above this multi-tested resistance, this old resistance must hold as support for the short-term trend to remain up. We'll look at Apple. Long-term trend is up, the 20s above the 50. Short-term trend is down. You can see over the last week or so, the market has been in a downtrend. I'm going to make a zone here. Okay, you see resistance, resistance, resistance. It got above it. Look, it became support. So my support area right around 147 to 146. A lot of these markets are locked in box ranges. There's the box range over here. So right now we're a few dollars away from what I would consider my first support area. And then under that, again, looking at the old resistance. This is a strategy I use all the time in all markets. As multi-tested resistance as our next support down around the 145 area. And you can see where the resistance is all the way up at around 152, 152 and 3/4 in that area. Okay, we'll look at Tesla. A long-term trend is up, short-term trend is down. You know, we had a very sharp rally, a sell-off. The market rallied a little bit, but net, I think, you know, the short-term trend is still down. This is an island top. The market gapped up in Western Technicals. It gapped down. Now, in Western Technicals, when you have an island top that gaps up and gaps down, the resistance is the top of the island up here. But thanks to candles, okay, we have a resistance area a little before the classic Western resistance area, and that would be the falling window. In this case, they're not too far apart, but this would be my first resistance area, the gap here. And as to support, yes, we're holding, you know, maybe the lows from yesterday, a little bit of a rally, but nonetheless, I would have to say the next support area is down at this big window. Again, it's a big zone, so it makes it very tough to give you an exact potential support area, but it's this whole zone here, essentially between 950 and about 910. Okay, let's look at, and then we'll wrap it up because I wanted to try to keep this to a half an hour. We're all really busy, and you know, I respect your time. So what do we have here? Shooting star and a bearish engulfing pattern. Okay, now initially the window should have been support, the rising window, but the market closed under it a few days ago, so that is no longer a support area. So we have this shooting star, let's make it a zone here. See here, here, and here, and the bearish engulfing pattern as potentially key resistance between 344 and 346. And as to support, looking at a tweezer's bottom, that's when you have two lows, the same lows, give or take, on consecutive sessions. Okay, that's right around the 323 area. As for first resistance, there's that classic falling window. And we'll wrap up with the S&P. Long-term trend up, short-term trend is down. Okay, this is called a high wave candle, a high wave doji. So the reason it's called high wave, there's a long upper and lower shadow. And it's not bearish. It just means the market's now confused because the long upper shadow means the market rallied, but by the end of the session, it sold off to here. During the session, it sold off, but by the end of the session, it rallied to over here. So it's not like these where the green candles, the market opens here and closes here or stronger here. It's a sense of confusion, and it's similar to a doji where the trend has gone from up, not from up to down, but up to neutral, and gives you a little warning that the market might be losing its breath. And the fact that the market stalled there on 2 consecutive sessions, a tweezer's top, okay, makes that the short-term resistance area, okay, the highs from last week. And as to the support level, here again, I'm going to be looking at the resistance zone, tested quite a few times. 1, 2, 3, got above it. Look what became support right around the, let's round it off, right around the 4,600 area. Okay, so that wraps it up. I want to thank you for joining me. We're getting a lot of questions about what Paul mentioned, so let me put that on. Again, Paul had posted the link in the chat window, and it will be under the video here. And if you have any questions, contact Paul at candlercharts.com. Okay, thank you for joining me. Have a great rest of the day and rest of the week.